So you're kind of cautiously optimistic when it comes to the global markets. You have some research out that global stocks are trading at about the 90th percentile of their forward PE, kind of a historical high. What do you make of, at least here in the U.S., stocks hitting record highs once again? You're looking at the Dow and the S&P, even with all the domestic uncertainty, with the the Fed probe, and also the global uncertainty.
Frank, stocks are hitting all-time highs around the world, not only for the S&P, and we are encouraged by what we've described, these record earnings. It's not only the case in the US. Actually, we are expecting broadening of earnings around the world. So all sectors, all regions are going to provide positive earnings growth this year. This is unlike last year that many, especially tariff-exposed sectors, have had contractions in many parts of the world, but that comes at high valuations. Now, valuations are never a reason to buy or sell equities. However, for us, they mean that the stock prices this year could be more vulnerable to the news flow. Therefore, all eyes on earnings, on the delivery, because according to our models, stocks are priced for delivery, for perfection, if not over delivery. And any cracks in this story could provide some volatility.
Beat, a great point on your part. We saw the Kospi hit a record high earlier this week. Our Steve Sedgwick was just talking about the Nikkei also hitting a high. Seema, I want to come over to you right now. You actually like Asia very much. You're saying one of the reasons you like it is because the tech stocks there don't have the same lofty valuations that we're seeing here in the U.S. Is that enough to make Asia more attractive than the U.S., or are there other factors in there?
Hi, Frank. Well, I think the Asia story, as you said, the cheaper valuations with exposure to technology, which continues to be the key demand for a lot of investors. A lot of this, however, is driven by just concerns around AI tech in the US and the valuations there. So some of the demand that we're seeing from investors and from clients is really around that desire just for some diversification to lower the risk from concentration in the US. On top of that, of course, within Asia or anywhere we're going to be looking at, as well as having a story like technology, you need to have strong fundamentals. And the good news has been within Asia, across Asia, we are seeing better economic prospects. There's still some central bank loosening. But very importantly, a lot of this based on the outlook for China. Now, we are quite positive on China. We see some optimism. We're not expecting a very, very strong year. But we can see a good news story coming out from the region. And that should help that performance of Asia stocks, and particularly for technology.
All right. Yeah, I want to come back over to you. And again, I want to focus on the U.S. for a bit. Obviously, gold's not just a U.S. story, but gold trading another all-time high, up 2.5% yesterday. That seems to be a flight to safety, people concerned about the geopolitics. But at the same time, not only the S&P hitting a record high, I'm looking right here. Comm services, industrials, consumer discretionary all hit new records, and we saw staples lead. This is a bit confusing because staples are defensive, but we're seeing all-time highs in so many different sectors. How does that translate in your mind when you're looking at the year ahead? And also, do we get an answer about tech being a safety trade in 2026? The fact that tech, it was higher, but certainly not as high as some other parts of the market.
These were many questions, Frank. Let me try to...
Yeah, no, there's a lot of questions there, in all fairness. And Seema, get ready. I'm going to ask you some of the same ones.
But the way I translate that, it is a stock market that is not as exuberant. It's a stock market that is worried about and taking into consideration the risks. But as always, it's about the fight between good and bad. And we can talk about many worrying factors for the markets this year, but also we can talk about many positive ones. And at the end of the day, we think the positives will outweigh the negatives. However, it could be a volatile ride. Therefore, gold, therefore staples. By the way, staples have been one of the biggest underperformers last year. So what has happened beforehand, you have to take into consideration as well. So that's the answer to your first part. I hope I haven't forgotten any about them. And the second part, tech. Now, I really agree with Seema on tech and Asia tech. So we are very, so the way we think about global equities this year, we think tech AI is going to continue to be a very important theme, but it's not the only theme. So there are many other themes around the world emerging, as they already have been last year. And we've seen that in this record outperformance of the rest of the world over the S&P, the biggest outperformance since 2009. Does it mean you sell tech? Not necessarily. But we think the AI itself is broadening. So the cheapest AI play for us is Asia, so we are overweight Korea, we are overweight Taiwan. We've recently downgraded China back in December, but we are also arguing that this year is going to be the year that we are going to see the broadening of AI beyond the beyond the hyperscalers, and will be moving into adopters. And this is where the rest of the world can shine as well. It's not only the US.
Seema, I'm going to kind of hit you with a similar question here. You don't often see gold higher and stocks hitting records at the same time. What do you make of that? And same question about tech being a safety trade. Has that sentiment shifted in a meaningful way in your mind?
Well, so the equity market continues to do well because the market is really focusing on that economic story. And globally, not just in the US, this is still really positive news that we're seeing from a lot of different regions around the world. At the same time, as you said, gold is doing really well. And some of that is in reflection of a lot of the political turmoil that we're seeing in the first 2 weeks of the year. I mean, coming into 2026, one of the consensus views amongst investors was that this would be a less politically volatile year. We wouldn't see as much turbulence coming from the US administration. Now, of course, the first 2 weeks have suggested something different. And I think that's what gold is responding to, whereas the equity market is still looking at the fundamental economic story. And with regards to tech, some of the tech euphoria has faded in the last part of 2025. It is still a good story, but to the point we've just heard, with a good economic story coming from the US, you should see a broadening out to other sectors that have been less loved than technology. So we continue to like the technology story, but we do see that there are other opportunities beyond that. We're looking at financials, consumer discretionary. So a lot of opportunities beyond just the AI tech trade in the US.